As introduced, my name is Goro Kumagai, and I'm the head of corporate reporting, and I'm covering the disclosure, accounting standards, and the audit and the assurance standards as a whole. So basically the corporate reporting as a whole. At panel 1, we have learned a lot about the recent developments around the sustainability reporting and engagements between investors and companies. That is, how investors can incorporate sustainability-related financial information into valuation and engage with companies using them, and how companies can improve their sustainability reporting in line with the ISSB standards through the dialogue with investors. Panel 2 title is From Policy to Practice, ISSB Standards in Asia and Investor Perspectives. As this title suggests, we will explore a more macro-level perspective around sustainability disclosures in Asia from the viewpoint of investors. We will discuss such topics as policy-related changes and practical considerations, including how adoption of ISSB standards can be further advanced in the Asia-Pacific region where momentum towards sustainability-related financial disclosure continue to grow. So, next slide, please. We are going to discuss 4 topics for panel 2 today. First agenda is assessment and response to the ISSB standards. Second agenda is we will discuss what investors expect from the widespread adoption of and implementation of the ISSB standards. Then, for agenda 3, we will talk about challenges to the widespread adoption of implementation of ISSB standards in Asian capital markets. Lastly, we would like to hear expectations for investors, ISSB's future activities from our panelists. So, then, let's start with agenda item 1, assessment and response to the ISSB standards. Could you show my next slide, please? Okay. Before moving to the panel discussion, let me give you a quick overview regarding the global acceptance of the ISSB standards, particularly in Asia. Already, Chair Faber mentioned that there are 40 jurisdictions all over the world which adopt or committed to adopt ISSB standards. In particular, Asia-Oceania, there are 17 jurisdictions which have announced their adoption or the commitment to adopt ISSB. And there were 14 jurisdictions as of June 2025. So within 1 year, 3 more jurisdictions were added, namely Kazakhstan, Nepal, and Uzbekistan. So that there are, large economies in Asia are included, but the, smaller and emerging jurisdictions are also very much interested in adopting ISSB standards. Next slide, please. This slide is from the ISSB's own update on its activities on according to IFRS Foundation update, as of the June 2025, the Asian Pacific region represents over 1/3 of the jurisdictions globally adapting or aligning with the ISSB standards. The Asia-Pacific is characterized by strong move toward a global baseline or ISSB standards through specific implementation scopes. that is climate only versus full sustainability value. Next slide, please. 7 jurisdictions have completed their regulatory consultation and finalized their adoption approach. These may be called as profile jurisdiction according to the classification by the ISSB. Let me give some example. Australia mandated climate-related disclosures based upon IFRS S2 for large entities with reporting beginning in 2025. Next, Hong Kong. Hong Kong is decided to fully align with ISSB rules, and large cap issuers must provide full climate disclosures by January 2026, with broader rollout of Hong Kong FRS S1 and S2 planned for 2028. So Hong Kong should have their own version of IFRS standards, modified IFRS standards called HKFRS. Then Malaysia, leading the region in a full adoption. First, Malaysia mandated ISSB-aligned climate disclosure for the main market companies starting in FY 2025. Other profiled jurisdictions include Bangladesh, Pakistan, Sri Lanka, and Chinese Taipei. Next slide, please. 7 jurisdictions are actively aligned but have not yet finalized all regulatory details. These may be called as snapshot jurisdictions according to the classification by ISSB. First, China. China issued a climate standard based upon IFRS S2 through a mandatory timeline for all entities has not been finalized, as the jurisdiction continues to chart its own path. Emmanuel will discuss about Chinese situation more in detail following my overview comments. Next, Japan. Developed standards through the Sustainability Standards Board of Japan, or SSBJ, mandatory reporting for prime market of TSE, Tokyo Stock Exchange, companies capitalized more than or equal to 3 trillion yen is expected for fiscal years beginning April 2026. Next, Singapore, focusing initially on climate-related disclosures, F2, mandatory reporting for listed issues begin in fiscal year 2025, with plans to expand to large non-listed companies by 2027. And South Korea, encouraging voluntary adoption from fiscal year 2026. Korea has introduced the specific guidance for its semiconductor and heavy industry sectors, but does not currently require the industry-specific data recommended by the ISSB. Other snapshot jurisdiction includes Indonesia, Philippines, and Thailand. And all these profiles and snapshots is as of June 2025. So such jurisdiction countries as Kazakhstan, Nepal, and Uzbekistan is not included. So this is my quick overview of the acceptance of the ISSB standards in Asia and Pacific regions. Then I would like to pass on to Mr. Emmanuel of ACGI to explore the current situation of Asia's 2 giant economies, namely China and India. You may know ACGA is one of the prominent advocates in corporate governance and sustainability reporting space in Asia-Pacific region. Amma, could you share with us your insights on the latest situation of the sustainability reporting in China and India?
Thank you very much, Kumagai-san, and thank you to the organizers for inviting ACJ to share some perspectives of what's happening across the region. What we are seeing, I think, for the two large countries with large populations, right, China and India, together almost 3 billion people, that's 40% roughly of the global population. They're moving in different steps, to be frank. And when we compare China and India with the rest of Asia, including Japan, Korea, Singapore, Malaysia, the other economies are moving faster towards adopting ISSB and sustainability assurance, etc. But with the big economies, Japan's obviously also one of the big economies in Asia, but the big developing economies, China and India, there are national priorities that may be different from what they see as the priorities of SASB earlier on, TCFD and ISSB now. I think China is moving closer towards ISSB, and India is a little bit more, if I can say, problematic. But for China, there are two tracks in terms of sustainability disclosure. One track is at the level of stock exchanges and what the stock exchanges are doing, and the other track is at the level of the Ministry of Finance and the PBOC and what they are pushing for. The stock exchanges, in terms of their focus on listing rules and requirements of listed issuers, has been on broadly ESG reporting guidelines since April 2024. The 3 stock exchanges, there's one in Beijing, there's Shanghai, Shenzhen, have all introduced ESG reporting guidelines that the large companies, the large index companies in China, as well as the companies that are dual listed, companies that are listed in China and Hong Kong, need to follow these ESG reporting guidelines that have been laid out now about 2 years ago. The Ministry of Finance, together with the PBOC, are focusing on what they call basic standards for corporate sustainability disclosure, which will be much more broader based in terms of applicability of companies. And it is ISSB informed, but not completely ISSB aligned, essentially because there's more focus on double materiality rather than single materiality. And there's also national priorities, common prosperity, rural development, etc., which gets incorporated in the sustainability disclosures that China is introducing. But very recent, a year ago, May 2025, MOF came out with their exposure draft on climate standards. And that is much, much more closer to IFRS S2. ACJ obviously responds and gives our views of our members on the regulations and how the regulations are developing. And we emphasize that materiality for investors, financial materiality is key. And one of the things to make the reporting comparable for what we're seeing across the globe for countries that are adopting ISSB, for that reporting to be comparable with what we're seeing in China, scenario analysis is really important as well. Because you have scenario analysis in some markets, but then you're comparing the same company, same sector, the companies in China or India, and you don't have the scenario analysis, then obviously that undermines quite an important aspect of what ISSB is trying to do. So overall, I would say China is moving in the right direction, but obviously it has its national priorities that are influencing on the sustainability disclosures that they're requiring. India is problematic in only because it had its own sustainability type of disclosures from much earlier on. About 10 or 15 years ago, they introduced business responsibility reporting. And then about 5 years ago, they enhanced that and they expanded it and they call it Business Responsibility and Sustainability Reporting, BRSR. Now, the BRSR is already there, and then I think when the Indian regulators look at ISSB and the earlier incarnations, SB, TCFD, again, the view is the existing framework is viewed by the local regulators as more relevant domestically. And they were looking at things like human capital. In the BRSR, there is reporting on human capital already. And that is coming into ISSB now. But when you compare India's BRSR with ISSB, those who have looked at a comparison of the reporting requirements of the two markets find that the alignment is only about 40%, less than half. However, within India, SEBI is the overall market regulator, and SEBI is the one that introduces the BRSR and monitors BRSR reporting. And then you have the central bank, the Reserve Bank of India, RBI, and they obviously are regulators for the banks and financial institutions. Now, RBI is focusing more on ISSB standards and interoperability or greater overlap between BRSR and ISSB for the banks. And I believe that the RBI is bringing in ICGN to look at the areas where these two can merge more closely together. I think that's a positive development in India, because if the banks and financial institutions move towards more ISSB disclosure, then I think the financial market regulator, the SEBI, may also then consider how to expand BRSR and sustainability reporting of companies to include more of the ISSB reporting framework. So the two economies with large populations are moving in the direction of ISSB, but a little bit slower than most of the other economies in Asia, and in particular Japan.
Thank you very much, Emma. Now, actually, I have shown you that the profile and snapshot countries, but India is not included there. But still, we now understand that the such countries as China or India, they have their own, circumstances, political circumstances, and their own goal. But still, I think it is encouraging to know that they are moving toward the ISSB standards, particularly such an important topics as climate change. That is, I think that is very encouraging, particularly investors' point of view. Okay, I have more things. I have more things I want to ask about, but because of the limitation of the time, that I will ask Jean that thank you. Anyway, thank you very much, Amal. Your comments helped us to understand more clearly that Asia's Indian and Chinese situation, I would I would like to ask Ms. Jean Stamp of Norges Bank Investment Management, or NBIM. Jean, could you first explain NBIM's position on the adoption and on the promotion of ISSB standards as a manager of the world's largest sovereign fund?
Sure. Thank you very much for having me. NBIM manages around 2 trillion USD, or about 330 trillion Japanese yen globally. About 18% of that is invested in APAC. And as a long-term investor, our returns depend on sustainable economic, environmental, and social development, as well as on well-functioning and efficient markets. So Japan is our second largest market by size after the US. So just to provide that background as to why we believe that the ISSB standards as the global baseline to report sustainability-related financial information will actually drive better investment insights and market efficiency. I think there are three key aspects of the ISSB standards that stand out for us. The first is the connectivity between financial and sustainability reporting. The previous panel touched upon that. But the ISSB standards, of course, share the same conceptual foundation as the IASB financial reporting standards, and that common definition of material information is critical for us. It gives the companies a disciplined framework for identifying which sustainability risks and opportunities are significant enough to disclose, and therefore to also factor into capital allocation decisions. And investors like ourselves will be able to receive sustainability information that's concurrent, connected, and complementary to financial statements, which gives us a holistic view of the company's performance and prospects over time. And the second aspect is the global comparability. We are active investors in 68 countries, so we need that reliability and that comparability across jurisdictions, which then facilitates the cross-border capital flows for investors like ourselves. And that helps us with portfolio diversification, and also for the companies, it increases their access to capital. And then the third is really the ISSB standards. They represent a significant enhancement to the TCFD. I know the previous panel talked about TCFD being a very useful stepping stone and practice for doing ISSB, but it's quite different being a TCFD framework versus ISSB being an assurable standard. And the requirements to disclose the current and anticipated financial effects, that addresses the core question that has frustrated investors for a long time, which is how to quantify the sustainability issues. So, because of these strengths of the ISSB, we support mandatory adoption on a compliance basis. So not comply or explain, but full compliance. And we are particularly encouraged by the pace of adoption in Asia Pacific, which has been very much the first movers. Japan FSA's approach also stands out on two fronts. I think firstly, it's not limited to climate only, so companies will report across all material sustainability issues. And second, the companies have to disclose Scope 3 emissions in the second year of reporting. So there's no additional delay beyond the inbuilt one-year relief. And this matters to us because our 2030 Climate Action Plan prioritizes companies that represent around 70% of our Scope 1 and Scope 2 finance emissions, but also those with the highest Scope 3 emissions. And in some sectors, Scope 3 emissions can be material and account for over 40%. So this is very much underpinning why we are very strong supporters of ISSB, and we also chair the ISSB's Investor Advisory Group.
Thank you, Jenny. How about policy engagement and stewardship activities undertaken by NBIM to support the adoption of ISSB standards in the Asian region, in which substantial investments are made by NBIM?
So our work to promote ISSB comes across through different methods, right? So APEC is strategic for us beyond the 18% fund exposure because, of course, I think as Amal touched on earlier, the region is very much accounting for half of the world's population, over a third of global trade. And APEC's role as a global supply chain hub makes it very important for our responsible investment work because it impacts many of the companies beyond those listed in APEC. So we engage mainly through regulatory dialogue on standard adoption. So we respond to consultations, we engage with regulators and stock exchanges to share why we need the information, how we use it. So we've done that in Japan, China, Korea, Australia, and most of ASEAN on their sustainability disclosure standards and their implementation roadmaps. Our focus has been very much on mandatory requirements, maintaining ambitious timelines, supporting adherence to ISSB standards with minimal local adaptations, and the use of global assurance standards. Then the second key way is through company engagement. So we engage with our portfolio companies to discuss their sustainability performance and disclosures. Last year, we engaged with 815 companies specifically on sustainability topics. So those meetings were called to discuss sustainability, including the planned use of ISSB standards and sector-specific metrics. And these companies actually accounted for about 60% of our equity portfolio value. Then the third way, we try to convene roundtables and have knowledge sharing with other investors on how we can have stewardship approaches to sustainability topics. We held one recently on social issues to look at what are the right disclosures and metrics that could be most useful both for ourselves and also for engagement with companies.
Thank you very much. Yes, it is very encouraging that you are you are already using the ISSB standards to that when you engage with your investee companies. Thank you very much. Then next, I would like to ask Ms. Shizuko Omi of JP Morgan Asset Management. And Shizuko, could you tell us about the stance of JPM Asset Management Japan on the adoption and promotion of ISSB standards?
Yes. So thank you, Kumagai-san. Just first of all, I'm deeply honored to be invited to participate in this distinguished symposium panel, so thank you very much. I am the Japan Head of Investment Stewardship at JP Morgan Asset Management. And JP Morgan Asset Management has asset under management of over $4 trillion. We integrate ESG considerations in our investments in all major asset classes. So JP Morgan Asset Management has been a strong supporter of ISSB and is a member of the ISSB Investor Advisory Group. So as long-term investors, we welcome the ISSB's focus on financially material aspects of the disclosure and transparency, comparability, and broad acceptance. As global investors, we see significant benefits in the global baseline that is envisaged by the ISSB, and we encourage the adoption worldwide. In Japan, we have identified ISSB-aligned disclosure as one of the key engagement agenda for 2026. And our intention here is to foster a shared understanding in the materiality identification process with companies and to request meaningful disclosures that connect sustainability to financial outcomes within the company's strategic directions. And by taking these steps before the mandatory disclosure requirements come into effect, we hope to encourage the company to disclose useful sustainability disclosure. That's all.
Thank you, Shizuko. By the way, Shizuko is a member of Disclosure Working Group of FSA, and she contributed very much to that, the sustainability reporting, to develop the sustainability reporting framework in Japan. Amal, I'm asking that the NBIM and the JP Morgan's policy stance on the ISSB. And could you also tell us that the ACGA's policy stance on the ISSB? Because I know that everybody knows that you are one of the predominant advocate of corporate governance and sustainability or resilience.
Our views, of course, represent our members. We have 106 members, including not just bank, including JPM, and others I'm sure that are also here in the room. And so ACGA has always been in favor and a public supporter of ISSB standards globally, because that's what our members need. Our investor members, whether they are asset owners or asset managers, they need a global baseline to compare companies across the world. And what they don't need is reporting from one region to another region that makes it difficult to understand what exactly is being reported and making comparability impossible. When you're investing in 60 or so different countries, you need to be efficient in looking at all the disclosures, the financial disclosures, accounting disclosures, as well as the sustainability disclosures. And it's important as well that ISSB emphasizes that this is all the decisions have to be useful for investors, and so single materiality emphasis. And that there is the emphasis on how the board looks at these issues. And that's a key issue when investors are talking to companies, not just management and what management is doing and how management gets the data, but how the board oversees the strategy and how the strategy then cascades into sustainability strategy, climate sustainability, as well as human capital strategy, nature strategy. It's important for investors to be talking to the boards and finding and knowing who in the board is responsible and should be the contact person to be discussing whether it's with JPM or not just bank or any of the other members of ACGA. So this global comparability, and I would add a little bit more, and I think we'll talk a bit more, Inoue-san was also emphasizing on one of his slides, assurance. There needs to be the assurance so that investors understand that there is that verification that gives them the comfort. And I think we'll talk a bit more on that.
Thank you very much, Amal. Now we know that how such institutions or organizations as ACGA or large, actually that huge investors like NBIM or JPMAM are supporting the kind of the global standards for the sustainability to improve comparability, transparency, assuranceability, etc. And I think it is a very encouraging move towards the more use for the sustainability information. Then I would like to move on to the next agenda. Agenda 2 is what investors expect from the widespread adoption and implementation on ISSB standards. So that I would like to ask our three panelists to provide their insights on the following 3 points from the investor's perspective. One is enhanced corporate resilience. Second, implement in corporate value over the medium to long term, and greater comparability and usability of sustainability-related financial information, leading more efficient analysis and decision-making. Okay, then first, Jin, could you provide us with some specific examples of how sustainability-related information is used to manage portfolio-level risk and asset-level selection and engagement?
Sure. So with the increasing availability of good quality disclosures, we are able to weave more of the sustainability information into how we take decisions at multiple levels. So if we look at it at a portfolio level, it certainly helps us to have enhanced corporate resilience. So last year, together with 17 other asset owners, we participated in a benchmarking study with MSCI and Swiss Re. So they looked at physical climate risk across 500,000 corporate assets and 11,000 companies, right? MSCI estimated that 23% of our equity value, portfolio by value, is already exposed to severe physical climate hazards today. Business interruption being the main source of losses, and extreme heat and heavy precipitation were predicted to affect the majority of our companies. So when we have this complete and comparable climate disclosures across jurisdictions, we're able to have a more accurate and useful analysis, which then helps us to highlight the spots of extreme risk and exposure. And interestingly, the study also found that only 10% of the companies exposed to the most severe hazards actually include physical risks in their enterprise risk management processes. So this, of course, helps us to think about how to engage with the companies. And these companies need to disclose their adaptation plans, whether the needs will be met by government investment or whether it's their own capex, because this distinction is financially material. Whether they have included the physical risk assumptions in their financial statements, because these physical risks can, of course, affect the utilization rate, the useful life, and the residual value of their fixed assets, and also insurance coverage assumptions, because the insurance withdrawal or reduced coverage can, of course, affect the asset valuations, leading to lower debt capacity and higher cost of capital. Then on the individual company selection level, we monitor sustainability risks across our entire portfolio, and we consider a sustainability risk to be high if we believe that the long-term market valuation could be adversely affected by mismanagement of sustainability risk. So since 2012, we've actually made 575 ESG risk-based divestments, and this led to an improvement in our relative return, cumulative return on equity of 0.65 percentage points. So this demonstrates, right, that ESG risks are financial risks, and ESG disclosures can also be useful as leading indicators of corporate underperformance for the purpose of selection. Then when it comes to the individual engagement, I touched on earlier where we have the specific meetings to engage with companies, but also in our general meetings. So last year, our PMs had over 3,000 meetings with companies. And at 45% of these meetings, governance and sustainability topics were discussed because, of course, we very much see them as being aligned, and we use the information as well for voting. So last year, we voted against at least one director at 35 companies due to material failures in the oversight and disclosure of ESG risks. So this tells the companies as well that board oversight of financially material sustainability risks affect our assessment of corporate governance quality and long-term value creation.
Thank you, Jean. Next, Cisco, could you also provide a practical example from your portfolio?
Yeah, of course. Thank you. So as global investors, we expect that the widespread adoption and implementation of ISSB standards will help us refine how we assess ESG characteristics at the companies we invest in, that leading to better risk management, more informed asset allocation and selection, and stronger engagement strategies. So at JP Morgan Asset Management, we are well positioned to take advantage of these improvements through our established ESG integration framework. We systematically incorporate financially material ESG factors into our investment process, aiming to achieve enhanced risk-adjusted returns over the long run. So our fundamental ESG score is based on proprietary research and company engagements, and our analysts complete a comprehensive 40-question ESG checklist for over 2,500 companies globally. In addition, we use a quantitative ESG score developed by our sustainable investing research team, working closely with our research analysts and portfolio managers. This score leverages the growing volume of ESG disclosures and data, as well as our data science technologies. So it provides valuable insights to help us assess how companies manage financially material ESG risks and opportunities within their industries. Engagement is also a key part of our process, and the ESG scores and sustainability data help us prioritize which companies that we need to engage with. And when milestones are achieved from our engagement, such as improved disclosure or adoption of better sustainability practices, we reflect these outcomes into the re-evaluation of ESG scores. So we believe these kind of efforts will contribute to enhanced corporate resilience and greater corporate value over the long term. So that's our in-house efforts.
Thank you very much. We have learned the world largest investors such as NBIM and the JPMAM have already actively incorporate the sustainability-related financial information into their investment and risk management process. Meanwhile, sustainability-related information has become increasingly important to the engagement between investors and companies. Amma, could you provide us with your experience on ISSB standards based upon your experience with collaborative engagement with corporate chief sustainability officers from an investor group perspective?
So I think the CSOs, the corporate sustainability officers, in the past, they've also been pulled in different directions. Should they be reporting by GRI? Should they be reporting by TCFD? And then you had SASB and TCFD and SASB now merged into IFRS. So when we've had collaborative engagements, or what we sometimes call ACG exchange discussions between investors and corporates, what we have often heard from the CSOs is they want to know what is really relevant to investors. What are investors actually looking at? And that answer now is clear. It is ISSB. GRI is also important when you're looking to give information to the other stakeholders, but for your shareholders, it is ISSB, because ISSB gives investors the data that's comparable and gives some guidelines on assurance. But the other aspect that I would also emphasize is the CSOs also say to us, when they have meetings with investors, the amount of time that is spent discussing sustainability may be 10 minutes in a 1-hour discussion, or maybe less, maybe not at all. And that also reflects that investors also need education. Investors also need to understand what are the topics, what are the areas that the board and the management are measuring, what is really relevant for financial risks. Because if it doesn't translate into measurable financial risks, then most portfolio managers would say, okay, this is something that might happen in 5 years' time, in 10 years' time. I'm measured on my portfolio performance this year and this quarter, right? So it has to translate into tangible financial risks for investors to be paying attention. And that is also why the ISSB standards, which focuses on single materiality, financial materiality, is so important, because it helps with the education of why this is relevant for investors as well.
Okay. Amaro, thank you very much. Amaro's comment includes some of the next attenders. Namely, a challenge to the widespread adoption and implementation of ISSB standards in Asian capital markets. I believe one of the key challenges for us to promote these sustainability standards is the education or capacity building on both sides of the reporting, corporate and investors. So we have only 15 minutes left. So let us be very brief. But I would like to ask that the three moderators what do you see the challenges to the widespread adoption of the implementation of ISSB standards in Asian capital markets? Okay. Yes, Amma already mentioned about education, but do you have any other suggestion or your insights about the challenge to the widespread adoption and implementation of ISSB standards?
So that I would say 2 levels of engagement. There's engagement with corporates, and then there's engagement with regulators. And we've talked quite a bit about engagement with corporates. I think it's also important to have this engagement with the regulators, for the regulators to understand why this baseline comparison is so important. And so I think that's the other major challenge, that we need more collaborative engagements, collaborative meetings between investors, large, medium, and small, groups of investors going to the regulators, the financial regulators, whether it's in India or China or Indonesia or Philippines or Korea, and emphasizing that it's not just this a few handful of investors who consider it important, but most investors who are looking at regional markets, global markets, for most investors, having ISSB as the sustainability reporting standard is absolutely crucial. So you need more collaborative engagement with regulators as well.
Yes, it is. I think it is a very good point. That I guess that your engagement with FSA, encourage that FSA to introduce the sustainability reporting in Japan, particularly based upon the ISSB standards. Actually, in Japan, that the SSBJ counterpart of ISSB is developing the Japanese standards based upon ISSB, but it's still that it is in aligned with the ISSB standards. So I believe that the Japan's sustainability disclosure will increase the comparability with other regions. Okay, then Jean, could you have any comments on the challenge to the widespread adoption of the ISSB standards?
Yeah, if I could sum it up, I'd say that we do not yet have a market consensus of what constitutes material information, because it's the first time that investors will get ISSB disclosures, and it's also the first time that preparers will make ISSB disclosures. So investors also need to build that capability as to how to extract the decision useful insights from the initial set of ISSB disclosures, because it's not necessarily the case that every piece of disclosure will be material to every single investor, and companies are also learning by doing. So that technology and training are essential. For us, we are using AI to improve our investment in the risk decisions. So we are expanding the scope and scale of the information we analyze to include corporate sustainability practices and how we can get information that's already in the reports or scrape other sources to fill in the gaps. And then we use AI to provide the governance and sustainability insights to our PMs and our stewardship professionals. And this is iterative. So these insights strengthen the company meeting processes, and they also deliver us the customized investment intelligence. So as we also learn by doing, and we understand as well what are the key pieces of information that are most useful for us in taking decisions, and that's also something that we can then engage with the companies on. So we find that companies that we engage with, especially those who are not scoring very well, for example, on climate, we contact them, we engage with them, we focus on the weakest performers naturally with material risk, and we compare that over time, after engaging with them, their performance and disclosure also improve. So it's iterative within the investor body, it's iterative between investors and the companies as well. And I think educational initiatives like SAAJ seminar series has really valuable precedents, and these should be shared or replicated across jurisdictions so that the wider investor bodies, not just the ESG professionals, but also the PMs who are taking the buy, sell, hold decisions, start getting a good sense of the type of information that's coming out, how to weave that into their investment processes.
Thank you, Jenny, for sharing your thoughts. Then Shizuko, could you also provide us your insights on this issue?
Thank you. So just adding on to what Amar Jen has already talked, I would like to point 2 points. I mean, so one is we have to kind of explain to invested companies how we are using this information, because in many cases they're trying so hard to gather this information without knowing how it is really used. So while we try to explain in our engagement meetings that these are very important information that is integrated in our investment process. So that's something we have to really try to kind of communicate with companies more. And as our investors, I think I'm a stewardship specialist, for example. We do kind of work very closely as an active manager. We do have analysts and portfolio managers sitting next to us. So we kind of share engagements. We kind of report our engagement meetings, milestones and so on at the morning meeting, investor morning meeting, and try to kind of share what we are doing on the stewardship side with investors, and to kind of really promote the investors' understanding about the material ESG issues. So as an investor, the education inside the firm is really, really important. And then within our firm, we're continuously working to enhance our skills in integrating ESG factors into our investment decisions. So we have strengthened collaboration and feedback among the stewardship team, analysts, and also the sustainable research experts, and and to kind of really look into what materiality should be looked at for each industry. That kind of discussions done not only by stewardship or analysts, but the sustainability research experts extracting the data. They're really looking at our ESG scores and then always mapping out what is the materiality for each sector. So that kind of interaction is really necessary to promote ESG integrations from in-house.
Thank you very much, Shizuko. That we have learned, the sustainability reporting or disclosures at very early stage. So there are lots of challenges, but I think it is very important for us that the collaboration among stakeholders, including investors, companies, regulators, and the assurance providers, etc. But anyway. This collaboration among stakeholders will help sustainability reporting to provide better information to investors, as well as the useful information to the companies, executives, to manage companies. I believe that the sustainability reporting should not be the compliance exercise. Rather, it should be the core information to the management, both management and the investors. Okay, it is only 5 minutes left, so that I would like to ask that the three of you about your expectations for ISSB's future activities. Then. Shizuko, could you start first?
Okay. As presented by Deputy General Inoue-san of the JFSA, human capital is a sector agnostic importance for most Japanese companies. Is a central concern for investors considering investment in Japan, I think. This reflects, of course, demographic challenges and historical investment in human capital. So although most Japanese companies are likely to identify human capital as material and use S1 framework to disclose information on human capital, but my personal view is that developing specific standards could be valuable for investors to make it more comparable. Human capital is not only material for Japan, but is also a global focus for us at JP Morgan Asset Management. Our engagement data shows that it has been the most frequently discussed topics by investors and stewardship teams in the past 2 years. And human capital factors account for a significant share of ESG scores. And our research also indicates that employee knowledge, skills, and engagements can materially impact the company's performance and economic value, making human capital analysis relevant for investors.
Thank you very much for sharing your experience and your insights. Then, Jenny, please. Jean, please.
Two areas that we would like to see ISSB enhance the activity. First, I touched on earlier about the need to build market consensus on financial materiality, and so that's where ISSB can support capacity building with both issuers and users together. And that ties in with more joint work with IASB on the connectivity. So we've supported IASB's work on climate-related uncertainties in financial statements, and after the first movers have come up with the ISSB reports, I think it's critical for that continued joint work and further guidance from IASB and ISSB to enhance that connectivity. And then the second area is just really to have a clearer roadmap for the SASB standards. What's the defined criteria for prioritization of all the remaining standards? Are they going to go to all 77 eventually? So this is helpful both for users, preparers, but also for regulators thinking about how they can phase and scale in companies for reporting.
Thank you very much, Jean. Yes, that the the connectivity is a very important issue for investors all over the world, and also that we know that the IFRS Foundation has a very much limited resources. Therefore, I believe that the roadmap by the ISSB is, and also ISB is crucially important to manage the expectation gap between the users and also the users and the companies and the standard setter. Thank you. Amma, lastly, could you make some comments?
Well, very quickly, I think the focus on financial materiality has to remain. And I agree with Jeannie, developing an understanding and more granularity of what really counts as financially material, that's one area to work on. Capacity building in emerging markets in Asia, both for corporates. You have some large corporates that have discussed how they've been on the journey to get to where they are. But in developing Asia, there are thousands of companies that are smaller size, middle size, already listed, but they need to understand how they can get reliable data, how to monitor what is relevant, and so the capacity building both for corporates as well as the investors on the ground in these countries. Because if the investors in Indonesia and India and China, if those investors are not talking to the corporates in their own country, then there may be a view that this is actually a Western concept. So it's important for education of investors on the ground in the countries as well. But the final thing I would say is assurance. We haven't talked that much of assurance. We don't have that much time. But I think just like accounting, if you had accounts that a company presented to you and they said, we didn't bother with auditors because we thought, it's not necessary. Similarly, if you have sustainability reporting without credible assurance, it's not going to be credible. And so it's really important, what we're seeing in Japan, what we're seeing in Hong Kong, that there's a regulatory framework for oversight of those who are providing assurance. But at the moment, it is a bit like a jigsaw puzzle. Each country will have its own standards and its own oversight of the assurance providers. This is also an area that needs to be coordinated regionally and globally, that the assurance standards in the countries are comparable, just like the sustainability standards should be comparable.
Thank you, Emmanuel. Yes, you're right that the assurance is a very important issue. Unfortunately, we did not have much time to discuss about it. But also in Japan, that how to assure sustainability disclosures has become an emerging issue here. So that sometime in the future, I hope that we have time to discuss about it. And I'm sorry that we are planning to take some questions from the floor or the participants online, but our time is up. So like panel one, that we have to finish now. And anyway, thank you very much for your kind attention, and thank you very much, our panelists, and please.
Yes, thank you very much for your insights.
Thank you.